Hi there, I'm Gareth, and in this online lecture I'm going to be talking to you about what you can expect to see in task number 4 of the Processing Bookkeeping Transactions assessment. Well, what does task 4 cover? Well, what you'll generally be expected to do is to take figures from the cash book and to be posting them into the general ledger. Now, if we have a look at the cash book we've got laid out here, what you can see is we're given the credit side of the cash book. So this is dealing with payments being made by the business. The credit side is looking at the reductions to the assets, so the reduction to the amount of cash we're physically holding and the reduction to the amount of money in our bank account. And in fact, the thing to think about is you can see in the first couple of columns here, we've got a total of £1,200 on the credit side for the cash account and a total of £10,000 on the credit side of the bank account. So over this period, whatever it relates to, we've had £1,200 come out of our cash balance and £10,000 come out of our bank balance. Now, you can actually see, hopefully, that is therefore a total of £11,200 coming out of the asset. That's effectively the credit being posted to either the cash account or the bank account. We've then got the various analysis columns, and the analysis columns are really just breaking down what those payments relate to. So you can see, for instance, some of it relates to some office expenses that we've incurred. Now, what you should find is that the total of the credits to both cash and bank, which we've already worked out, is 11,200. That should actually equal the total of the analysis columns, because the analysis columns are really just helping us with where the other side of the double entry needs to be posted. And if we've got credits being posted to both cash and bank, these will therefore be the debit balances being posted to the various other accounts. And in fact, if you add up 200 plus 9,500 plus 1,000 plus 500, you should find that that comes to 11,200 as well. Which really just illustrates that the whole point of your books of prime entry, whether it's the cash books or the day books, the whole point of these books of prime entry is to actually help you build your double entry, and that's really the purpose of all the various columns. Now, one thing we were told in the text of the task here is that the cash book is both a book of prime entry, so it's the first place they're recording various transactions, in this case the payments coming out of the cash account and the bank account, but it's also part of the double entry bookkeeping system. And that's quite an important piece of information, because what that's telling me is that they've already posted those credits to the cash account and the bank account. This cash book is part of our double entry bookkeeping system. You can think of that as literally being the ledger accounts for cash and bank. So in fact, because they've already got the 1,200 as a credit to the cash account and the 10,000 as a credit to the bank account, we don't need to post those credits. What we need to do is post the other sides of the double entry. We need to post the debits to balance. So in fact, in this example, when it asks us for the 4 entries in the general ledger, what do we need to post now to balance those 2 credits that have been posted? Well, you can see the first analysis column is for VAT, so to the VAT control account, we're going to be posting 200, and that's got to be a debit. We've then got 9,500, which is being posted to trade payables. That's presumably payments made to credit suppliers, and so reducing the balance we owe them. And to reduce the balance we owe them, that would require a debit balance. We've then got cash purchases in the next analysis column. So 1,000, that will be the net value of the cash purchases that we've made, therefore the expense we've suffered, and expenses would be a debit, wouldn't they? And in fact, the final column is another expense, which is some office expenses. We've got £500, and again a debit to show the net office expenses cost. So what you can see here is all we need are 4 debit entries to correspond to the 4 analysis columns, which will therefore balance against the 2 credits that they've posted already to the cash account and the bank account. So do notice here, because we were told that the cash book is part of the double entry bookkeeping system, the assumption is that those credits are therefore already in the general ledger. We therefore only need to post the debits to balance. Well, we're then told that one of the bank payments to trade payables, you'll remember we had that 9,500 that we'd paid to presumably some different credit suppliers, and one of the bank payments was to Edward Limited for £500. So Edward Limited must be one of our credit suppliers. That's why it would be analysed as trade payables payment. We must have owed them at least £500 and we've paid off that £500. So what will now be the entry in the subsidiary purchases ledger? Now remember, when they talk about the subsidiary ledgers, or sometimes described as the memorandum ledgers, the purchases ledger, or the sales ledger if you're looking on the customer's side, this would be the list of individual supplier balances. So literally a list of how much I owe each of my credit suppliers. Well, we've just paid off £500 from one of those credit suppliers. Now, what you've got to be a bit careful with here is the account names you're using. If you remember in part A, the account names were literally the ledger accounts relating to each category in our account, so trade payables or VAT or cash purchases. They're literally the T accounts or the ledger accounts in the general ledger. When we're dealing with the purchases ledger, though, this is for individual suppliers, isn't it? So in fact, the account name will be the name of the supplier we're paying. So in your drop-down menu, you should find an option for the supplier you're paying off. So I'd choose Edward Limited. Don't be confused and pick trade payables. We are paying off trade payables, which is exactly what we've just shown in part A as being the posting to the general ledger. What we're now thinking about is how we would update the individual record of this particular supplier. Now the amount we've paid them is the 500, and that's going to reduce the amount we owe them. I've paid them £500. How do we reduce a trade payables balance? Well, trade payables is a liability. Liabilities are shown with credit, so to reduce the liability, I think I would need to debit Edward Limited's account, basically to knock off the £500 that I've paid them. Well, I'm hoping you found that useful, just for deciphering what they're expecting you to do in task 4. And again, this is one sample task of the sort that you might see, but there are other ways they can examine this stuff, so do make sure you are practicing a variety of different types of tasks in this area. But hopefully you found that useful, and hopefully I'll see you next time.